Hello, traders, and welcome to yet another episode. And today I want us to talk about the psychology behind the blown accounts. Because it's very fascinating because 90% of retail traders actually lose money. And most failures are not as a result of strategy, but they are psychological mistakes. And today I want us to dive into why traders really blow accounts. So, I think one of the things that really makes traders to blow account is the myths around trading. And one of the common myths that has been really been conceived by traders or consumed by traders is that more trades is equals to more profits, right? And this is a myth. Actually, in the financial market, less is more, right? Less is more. So you don't want to expose yourself so much in the markets. So you want to take less trades, but what you are calling a plus setup or what we call a high probability setup. Also, there is another myth that big risk is equals to quicker success. Remember the financial markets. This is not your get rich quick scheme. So if you have come here to make real quick money, then forget it. Is just the high time that you need to restructure your mind or restructure your thinking and your thoughts uh, so that you can be able to see success, or else you just leave it at that because it's not a get quick rich scheme, all right? And the truth, maybe probably trying to debunk this myth, the truth here is that mindset and process is what matters most. Your mindset and process. So you need to have a sober mind, right? You need to have really quite a strategic process in terms of how you're approaching the markets, in terms of how you are looking at the setups, in terms of your expectations. Again, don't have very much high expectation, or what I call not really high expectation, but don't have unrealistic expectations. All right, like maybe trying to double an account within the same day. Okay, so you need to have what we call realistic expectation, and that is achieved by you having smart goals. That is a specific, measurable, attainable, realistic, and time-bound goals. All right. So also we have seen the issue of overconfidence in the markets, which really tends to distort how traders approach the market and makes them to lose money, especially the retail traders. And what I'll tell you is that success in your demonstration account builds false confidence. And the reason why I advocate that don't really dwell so much, don't really overstay so much on your demonstration account or your demo account, because this is only going to help you backtest your strategy or fine tune your strategy. The real trading is in the live account. You better deposit small amount, even $50, $100, whatever the small amount is for you, and try to learn it from the live account, because that's where the psychological bit comes into place. The emotional attachment of you seeing maybe real live trading, you losing -$1, -$10. How do you feel? How do you react? And therefore, you're able to know your psychological pitfalls as early as possible, and you are able to counter that and look at ways that you can be able to improve. So again, over trading really might follow early wins. All right, you might be successful the first few days, but I tell you, the more you overtrade, then because overconfidence can lead you to overtrading. But the more you overtrade, remember, the more you're exposing yourself, and the higher the chances that you might lose a lot of money, or maybe probably end up a blowing account. So again, overconfidence can also lead you to risking big or entering big in the market, because now you have maybe a series of 10 wins. You feel like you have cracked the code, and then now you tend to ignore the risk management rules. All right, and the moment you do that, it's like the market has highs. It's seeing what you're doing, and the market likes those kind of situation, because it will really take you out of it. Probably you end up blowing your account. Okay, so emotional trading versus strategic trading. So when we talk about emotional trading, this is whereby you're trading based on fear, based on greed, and also hope, right? But a strategic trader, or what I'm calling strategic trading, this is a trader who follows a plan, ignores emotions, and is well articulated, approaching the market with the best mindset, right? And you find that most of the traders, they fail because they trade with emotions. Either they are fearful or they are greedy. Okay, whether they are fearful or they are greedy. But we are going to digest the fear and the greed aspect of it, because these are the two main mistakes that most of the traders make in their trading. Okay, so impatient also really matters a lot, or really influences traders. Impatient and greed. That is whereby the aspect of wanting to make fast money, right, which leads to poor setups. Okay, then it makes the greed to escalate. And therefore you end up maybe probably increasing your lot size, risking more than you are willing to lose, and what ends up is now you blowing account. So what is important is patience. The financial market, specifically forex, it's a game of patience. When I remember when I came into forex trading, I really didn't have that virtual of patience. And remember, by the way, patience is a gift, or it's a fruit of the Holy Spirit. So for me, I didn't have a patience, by the way, but the markets really taught me to be patient, right? It really taught me to be patient, because I lost a lot of money because of impatience. Then there is the fear-based decision, whereby now you find maybe probably greed has led you to losing a lot of money. Then now, because you have lost a lot of money, then what comes into place is fear, and then you end up making fear-based decision. That is the fear of missing out, the fear of losing profits, then which makes you to maybe probably have a early exit, the fear of being wrong, which again makes you to start doing revenge trading. So as a trader, you should approach the market with confidence. Don't have fear, all right? Because it all begins from you believing in yourself. So if you don't believe in yourself, then it means that as much as you might try, then it might not work out. You might be trading from a point of fear. And to be able to overcome fear is to practice proper risk management, and to trade only high probability setup, or what I call A plus setup. Okay, so again, you find there is the impact of the lack of discipline. Okay, so the lack of discipline. How does lack of discipline come into the financial market? You not journaling, you not following your trading plan. You have a trading plan that you have really drafted a very nice trading plan, but again, you find yourself are not following your trading plan. Also, skipping confirmations. All right, and how you can be able to avoid this is basically to have a checklist. Right, when you're trading, a checklist is just a sample of maybe probably some maybe 6 to 7 questions that you have to tick them all before you take a setup, meaning that with those questions or with your checklist, you will not have maybe probably skipped any of an important bit that might try to jeopardize your setup, right? So sometimes also it's good also to look at it in terms of psychology versus financial capital, and you find that emotional strength is equals to staying power. So if you have emotional strength, if you have been able to manage your emotions, then you'll have the staying power in the financial markets. And you understand that most traders, they burn out mentally before financially. So before you blow your account, already mentally you'll have burned out, because maybe probably you'll have some sequences of losing trade, maybe, or maybe your emotion will be drained, and therefore which will lead now to biased decisions, which will now lead to you now blowing your account. So it is always good to protect your mindset like your balance, right? Protect your mindset like your balance, because I can assure you, it begins from the mind before going to the financial loss, right? So what you need to understand is that a trading psychology is more important than a strategy. And the reason why you need to really try and find out whatever your psychological pitfalls are, and then now you try work on them. The earlier, the better. And again, the reason why I always emphasize, don't overstay on your demonstration account. Okay, so identify and correct your emotion patterns, and also master the mental game first. Right, so you have to be really smart mentally. So if you found these helpful, please like, subscribe, and share. And also, you can comment maybe probably one of your psychological pitfall, and maybe probably I can do a video around it to maybe help you to overcome that psychological pitfall. All right. So until next time, stay safe, stay disciplined, and trade with caution.